G'day everyone, welcome back to Pete's Investing. Today is April 24, 2023. This is the Euro-US dollar update. So I've got here the daily, the 4 hour and the hourly. And you can see here they're all in a upswing, and on the hourly it's just broken up through the moving average of the CCI 1500, which is our key indicator. So let's go through each of these first in a bit more detail. On the daily, again, it's been an upswing for some time. We use the CCI instead of the moving average 200 of the price chart as a key indicator. So we drew this support level here at 95.35 and its resistance at 11076. Now, in our last update, it did penetrate this descending trend line, and it was moving towards this resistance which we drew, and it's actually hit that resistance and bounced down from there. So it may well gravitate back towards this, or somewhere in between the descending trend line and this resistance. So we need to see it break confidently below this wedge or more above this wedge to be more confident about going long or short. At the moment it's undecided in terms of where it's going to go, so just be mindful of that. And I've drawn this Fibonacci retracement here. I just want to demonstrate it did actually bounce off the 38%, roughly the 38% retracement level, and further to the upside in that little wedge area. So now on the 4 hour chart, again more closely, I've drawn this finer Fibonacci retracement, and we always look out for the 61% whenever it breaks above that, from between that high and that low. Whenever it breaks above the 61%, that's a sign of a trend reversal. In other words, had it broken to the downside, it would have been a trend confirmation to the downside. So here it's broken to the upside, so we've got to respect that. Now where we're going, again, we're looking at potentially breaking above this resistance to be more bullish, even though our CCI moving average is showing a bullish momentum on the 4 hour timeline. On the hourly, again, it's a bit undecided. It's sort of hovering above and below the moving average. As you can see there on the price, it's going pretty much flat at the moment in the last few days. So we need to see it break confidently above that to be more bullish, or alternatively break to the downside and start to be more bearish in that area. But again, we want to trade in the direction of the overall daily and the 4 hourly if you're trading the hourly. And it has broken to the upside, so you could possibly take some long trades here. One idea I use is the fractals. So going long only in this period. So whenever the candle breaks above the fractal, go long. And I like using percentage or monetary gains, short little small gains, rather than one big gain to take profits. So again, at the moment, it's just hovering inside the fractal. I wouldn't be going long at this point, but if it starts breaking and the candle breaks above like it did there, you would take a little long position there, for example. Cautiously, I wouldn't be going short, only because you'd be going against the 4 hour and a daily trend, which is in a long positioning only. So at the moment, to understand how to properly trade using the average down, if you're trading that and if you got caught out against you, reference the links in the description below. Subscribe and like us and support us more on Patreon. Thanks for watching, and see you in a future video.